IVM.
This is a special edition of Paisa Vaisa. On this episode, we have Shalin Shah, an angel investor and founder of SPYRL Ventures, a fund focused on FinTech and Industrial IoT. This is the first part of the series where Anupam talks to Shalin about history of money, barter system, and how cryptocurrencies came into existence.
Folks, welcome to Paisa Vaisa. I am your host Anupam Gupta, and if you have been interested in cryptocurrencies, which I'm sure you have, because you can't miss the headlines these days, can you? Bitcoins here, Bitcoins there, Ethereum, and so many other things. I've personally not been able to make any sense of them. I have with me a special guest for this topic, Shalin Shah. I heard the podcast on Shiladitya's Shunya One, and I thought it was really interesting. And Shalin has done a lot of things, which includes being in hedge funds and a lot of other stuff. And he has also invested in cryptocurrency exchanges. I'm going to hand this over to Shalin, who will give us a background of himself, what all he's done, and he's done a lot of different stuff, and what made him invest in cryptocurrencies. Right, Shalin, over to you.
Thanks, Anupam. So I've actually been listening to a few of your podcasts as well, learning a little bit about insurance, for example. I think the earlier episodes were very interesting as well, just because I'd never kind of gone through the Indian markets as well, especially for insurance. So a little bit about myself. So I completely grew up in the US. I studied there mechanical engineering and biomedical engineering at Carnegie Mellon, worked at a hedge fund for 5-6 years. In the U.S. markets, in public equities in the U.S.
Okay.
Then I joined the Piramal Group actually in Boston, where it was led by at that time, just turned into a dean of Harvard Business School, Nitin Noria.
Nitin Noria, of course, yeah.
And we deployed, just short of $1 billion in a year and a half. And
this is for investment in the Indian market?
No. Pretty much international. So we actually invested a little bit in Germany. We had a spin-off of Bayer Healthcare.
Okay.
We bought out a information management company in the US, and a few other things that we had kind of done while I was there.
Done hedge funds in across what asset classes?
Just public equities in the US.
So equity, real estate.
So actually in Boston it was not real estate, it was more private equity.
Okay.
Then I moved to Bombay to work with the Piramals, where it was largely real estate, but also working on things like the Shriram transport transaction, which is one of the first things I kind of was dealing with.
That was a big one.
And then also, I guess the last thing I did with the Piramals was lead the fundraising for them for Piramal Realty, which was the first time I've been on the sell side.
Okay.
And we ended up raising from Goldman Sachs and Warburg Pincus, which were great partners to have.
Okay, I should probably get you in on real estate in India, if at all you've looked at the asset and whether that's good or not, because a lot of people out there have this entire thing, why is Mumbai real estate so expensive? Should I buy a house? Should I invest in a house? And honestly, I have no idea. I don't know if that makes sense to you.
After even the 5 years that I've been doing that, I still don't understand Bombay real estate, to be honest.
What period was this with the people for the real estate part here in Bombay?
From 2012 to 15.
Okay, so you pretty much got one part of the leg up, because 2009 was when the bottom happened for the real estate market out here, and then a lot of places it just, I think it probably topped around about 2014, 2015. After that last couple of years, it's been a bit this. So tell me about cryptocurrencies. What you've done real estate, you've done so many other assets. What led you to?
Yeah, so for me, so now after the Piramals, I basically am trying to raise a fund to invest in fintech startups.
Okay.
I guess the very first investment in a seed stage investment I've ever made was in a company called Coinbase.
Okay.
Coinbase,
based in India?
No, Coinbase is based in San Francisco.
Okay.
And they are one of the first exchanges for cryptocurrency.
Okay.
Initially, they only were doing Bitcoin.
Right.
And they are probably one of the best funded companies in this space. They're highly profitable.
Okay.
Maybe off the air I can tell you how profitable.
Right.
And they have, something around $250 million in the bank today.
Wow, in cash?
Yes,
wow.
Because they generate a lot of profit.
Okay. Listeners, just to explain the concept of an exchange, whenever there's an asset class which is traded on a daily basis, when you look at stocks have exchanges, commodities have exchange. In India, for example, you've got the Bombay Stock Exchange if you want to trade in public stocks. You've got the National Stock Exchange. For commodities, similarly, you've got MCX, NCDEX, and a lot of other exchanges. So cryptocurrencies is something similar. You also have exchanges for that where you can buy and sell. So just to put that in perspective, go on.
So Coinbase is one of those companies that also has a wallet, an exchange, and cold storage, which we can get into each one of these at maybe a later point, once we've kind of gone over what Bitcoin is and kind of the background. But just basically in a couple of words each, the wallet just is a placeholder for where you can, an address essentially to where you can deposit your Bitcoin.
Right.
Cold storage is oftentimes used so that there's an offline way to hold Bitcoin in case you're very skeptical about security.
Okay.
And the exchange is where you can obviously trade, generally traders that want to do higher volumes with less kind of fees associated will get on to the exchange to trade.
Sure. So Coinbase, any other investments in crypto?
So this was my first and only. I had invested in Bitcoin at the same time. I think that if I look at both investments from a return perspective, I still hold Coinbase. I invested in Bitcoin, but very quickly got out of it because I thought I had made a lot of money when I saw 8 times my money in a few months.
Suck, yeah.
So it was in the teens when I bought Bitcoin. And today I kick myself every day.
You're still invested, maybe in an indirect manner. So you're still riding that boom, I'm sure.
Yeah, no, that's true.
Okay, so let's get into a basic introduction of cryptocurrencies. The history, utility, all the terms that you told me about. You said about wallet, cold storage. I think we can start with what exactly is a cryptocurrency.
So if I may, if I can quickly run through kind of the history of money, just so it gives the impact of what and why Bitcoin is important. So there's a lot of documentaries actually on money and the history of money. If you kind of ever go on to Netflix,
the whole barter system and stuff like that.
So there's Zeitgeist, which was a great documentary. There was The Smartest Guys in the Room that was about Enron and the kind of fiasco around there. There was True Cost, and if you want to hear Matt Damon be the guy talking, then there's Inside Job.
Oh boy, Inside Job was okay.
But I'll try to summarize basically kind of a little bit about money and why Bitcoin became or is today so relevant in that history and evolution of money. So if you kind of go back and kind of visualize now kind of caveman time.
Right.
At that point, obviously no phones, no nothing.
Right.
How do you kind of trade with each other? If I am growing, wheat and you're growing rice, I want rice. How do I kind of trade with you? And so there was a barter system. I'd say I want one bushel of rice and you want one bushel of wheat. Let's just trade. But then it became a little bit more complicated where if I didn't want the bushel of rice, I wanted the bushel of cotton or something, and you had the cotton but you wanted the bushel of something else. How do we kind of trade if what each other has is not what we want?
Nothing common at all.
So if there's no commonality, then what do you do? So the immediate kind of ease of use was to kind of find a commodity that everybody wants. Which could be seeds, it could be cows, it could be anything that's
whatever,
exactly. And so then that becomes essentially the first adoption of money, so to say, from just pure barter. So seeds now is our usage of money, where I'm saying, okay, I want your rice even though you don't want my wheat. I have seeds to give you. Here's X amount of seeds.
So my job becomes then to find seeds from somewhere, keep them, store them, mine them, whatever it is, so that whenever I need something, I can go out and say, hey, I've got 10 seeds or 20 seeds, give me what I need.
Exactly. Exactly. So now the problem with seeds now or cows is that it's not easily transportable, and it's something that you can't just go around carrying everywhere you go. So then, the evolution of seeds to metals came about, which is scarce metals like a copper, silver, gold, etc.
Scarce at that point of time also, because that's how you know they're rare. So if you have that with you, you hold something valuable.
Correct.
Sure. Okay.
Which then was divisible, and so you can cut it up into smaller pieces so that you can kind of trade it. Was also smaller objects so that you don't have to carry around bags and bags of seeds. So it made kind of a jump from seeds or other kind of commodity money to some metallic form of money.
Correct. Yeah.
And so if you go from that metal, then what started happening was governments. So I guess even if you take one step back, that metal then became very interesting because things happen in terms of people stealing your metal.
Yes.
Things happen where, how do you kind of transport metal, etc., and store the metal. So initially what ended up happening was people started giving their metal to be stored in temples.
Right.
And the temples would basically give you a receipt of some form and say, here, you have X kilograms of copper or X kilograms of gold, and here's the paper showing that you own that much money.
Yes.
And so that paper became your value.
Yeah.
So now you could give this paper if you needed to somebody else, and you basically have transferred your money to somebody else.
Yes.
Right? So you don't have to go and take your 5 kg of gold. Now you just kind of gave this piece of paper, which the temple is holding for you, and gave that paper away.
So you've just converted a big form of a physical bulky asset to a piece of paper by just moving the authority of exchange to that, to a much easier mode. That makes things much, much easier for everybody who's going to use that.
Exactly.
Sure. Okay.
So from the temples, if you kind of fast forward, this became more of a government and banks issue. So now instead of you storing at a temple, you're storing, and the governments have taken over. And so they've given you a coin or some kind of paper that basically bears their name on it and their kind of issuance on it.
And you've got units also now. So that is like $10 backed by $10 worth of gold. And the gold is in the bank and the currency note is with us.
Correct.
Sure. Okay.
So now you have this paper that is backed by gold.
Yes.
That is owned by essentially the governments.
Yes.
Or run by the governments, I should say. Which, by the way, if I kind of sidetrack here, in India, we actually never had gold-backed currency. We had silver-backed currency. So from the Mughal Empire time, the rupiah kind of comes from Mughals, which was all silver-backed.
Okay.
Which caused a lot of trouble for India in the current century, actually, or last century, actually, because silver used to be far more rare. It became far more common.
Okay.
And so there was, most of the world was gold-backed, while India was silver-backed. So it caused a lot of problems for India in general. So if we then kind of say, hey, look, I have this paper now from governments that I can go and trade with. After that, what ended up happening was basically that these governments said, hey, look, or these banks basically said, hey, look, I'm storing your gold now. We don't need to tie the money to gold anymore. We'll just kind of, this paper actually has value. Is that this paper now doesn't mean that you'll get 5 kgs of gold. It just means that it holds some value.
It's my promise. It's my word. I'm saying that it's worth.
Trust me, it's worth $5 now. I don't know what that gets you, but it's got value.
There's the Bretton Woods thing in the 70s that basically that it ended the entire gold
back system.
The gold back system. Sure.
Correct.
Yeah.
And so suddenly now you were putting in you weren't getting back potentially gold from a bank. They were just telling you, hey, we have your money and this is the cash that you're depositing, and that's that.
It's and I think that's why all currency notes have that promise part on that. I promise to pay the recipient whoever it is 10 rupees or whatever it is worth. Okay. Okay.
So now if you kind of take another step forward, from this cash that these banks now have and you're depositing to, they went one step further and said, look, you know what, why do you need to carry on cash everywhere to store the money? We're going to just flick a few kind of keys here and digitally we have shown that you have an extra few figures on your bank account.
Okay.
And so now you don't have to carry around cash. We just have to adjust this digit on our ledger that shows that you now have 1 crore in cash in our bank, but we don't need to hold the cash anymore. And so suddenly you've come to the digital age today.
Right.
And And so now you don't really, have this cash sitting somewhere. The banks also now are kind of all digitized. And so, there's basically some numbers on some register that are showing on for your ledger.
Okay.
And that's where we are today.
Okay. So we had cash, we had credit, plastic money. We've even moved to digital wallets.
Yep.
Where does cryptocurrency come from? Where did it originate? I was listening to the Shunya One podcast, and there was a lot of the trust system out here, I think, which cryptocurrencies said that we are going to set up completely something completely different. There is going to be a ledger, but that ledger is, it's not in the conventional way, the way that banking systems exist today. That I go to an ATM, I withdraw money, or if I swipe my credit card, I can buy, say, a mobile phone, or if I use my digital wallet. Saying, okay, all of that is on one side. We're going to come with a completely different way of transacting. How does that come about?
Sure. So now if we go into what Bitcoin is.
Sure.
So why this was such a big jump and innovation for money from trading barters or seeds or gold or other things,
right,
was that if you split Bitcoin into two pieces, one is blockchain technology and two is Bitcoin as kind of a currency that sits on this blockchain.
Okay.
So first, the technology point of view. What's great about it, without getting to the technicals of the technology, what's the benefits of it are, first, essentially this is something that is openly visible.
Okay.
The ledgers here are kind of clear. Nobody really owns them. So there's no central bank that you have to go to that kind of makes sure that, hey, what you put into the bank, somebody's accounting for it, and what they give out to somebody else on loan, they're accounting for it. Here, the entire ledger of who has what is all publicly available, and anybody can see it.
Okay.
That being said, is that it's very hard to attach an address to an individual. So it remains relatively anonymous, if not entirely anonymous, whereby even though it is publicly available, you still can't figure out whose address is who.
Okay.
You can just trace where things have gone.
Okay. Let me get this into a specific example, right? So let's say the two of us are transacting into, say, I'm paying you, whatever, say 3 Bitcoins for you to do a specific work for me. Can Shraddha know this transaction?
She could see that if she knew both our wallet addresses, she could see that money had been traded between these addresses.
Okay.
It'd be very hard for her to find out what these addresses are unless you gave them to her.
So is that like saying a wallet address is like an IP address? Because for an IP address, you can go into a whois directory and find out, okay, this is the name and this is the address. Is that similar to that? Or?
Somewhat similar, but not quite. There isn't kind of a lookup system for these addresses, and your addresses can constantly change.
Okay.
You don't have to have one address.
Okay.
You don't have to have one wallet for that matter either.
Right.
And so that's why it's not necessarily trackable or traceable.
Okay.
But at the same time, she does see that money went from one wallet or one address to another wallet.
Okay.
And so, for example, if she's a merchant receiving the wallet, she can verify that, look, I have received the money.
Okay.
And so that's publicly available. And she didn't have to go through Visa, MasterCard, or HDFC or SBI to verify that the money has come into her account.
Right.
Which means that now there's no cost to the merchant because she doesn't have to pay the credit card company or the banks to verify and transact with that. So that's the other kind of positive thing, is that it's an open and visible ledger.
Sure.
The second thing is there's no transaction costs.
Right. That's like saying that if I swipe my credit card to buy petrol, there are 2 or 3 entities involved out there. There's a petrol pump, there is probably the bank, and there's me. Say if the petrol pump accepts Bitcoin, you just take away the bank from the transaction.
The bank and the credit card. There's no verification that the credit card needs to do with the card.
Okay.
And so from that perspective, you've just got out two middlemen, and so you have essentially free transaction costs.
Okay.
Now today, we as people that are using cards and banks don't necessarily see the cost directly. Sometimes you do. If you open a checking account, don't have that much money, you may be charged for it.
Okay.
same thing with credit cards. Credit cards actually aren't charging necessarily us unless you are taking out a loan with them in the sense that you don't pay back in time. Then you're essentially taking out a loan with them and then you pay interest. But if you pay on time, there's no charge with a credit card. And that's because the merchants
is paying
for that. So the bhajiwala or the guy that's at the kirana store or Vodafone, they're taking the cost and bearing the cost of the credit card in that situation. And essentially if that's a cost, they're by nature passing it on to their consumers. So while we're directly not paying for it, we are paying for it at a higher cost because now Vodafone's X number of minutes is going to be a little bit more expensive because I had to pay by credit card.
So basically once you involve an intermediary between two people, the costs go up.
Correct.
That's probably one of the reasons why cash, which is what we know as currency, is so much more easier to transact. There's no third party out there. I pay you $10, you've received it, it's visible, it's done. So I think that's one advantage or even one similarity that Bitcoin has with physical cash. And it's much better to that extent than say a credit card or a debit card. Have I got that right?
Yeah, that's absolutely right.
Okay, great. Folks, that was the first part of our series on cryptocurrencies. In this episode, we covered the history of money, the barter system, a lot of other things, and how cryptocurrencies came to exist, their utility, and how they work. In the second part, we're going to move to a very Indian-specific context, and my guest, Shalin Shah, is going to take us through how cryptocurrencies and bitcoins work in India. Stay tuned.
Thank you for listening. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com.
एक्सक्यूज मी भैया, एक्सक्यूज मी.
बोलिए मैडम.
मेन्यू में क्या है?
मेन्यू में सीन अनसीन है, पॉडकास्ट है, ऑन कोर्स है, साइरस है, मेड इन इंडिया, रीडिस्कवरी प्रोजेक्ट, एम्पावरिंग सीरीज, सेक्स वेक्स है, IVM लाइक्स है, सिंप्लीफाइड है, कीपिंग इट क्वियर है, टिंग्स एंड डेस्टिनेशंस है, माय नेबर जकरबर्ग है और द फैन गराज है. आपको क्या चाहिए?
एक बार रिपीट कर देंगे क्या?
रिपीट नहीं करता हम. आप जाओ IVMpodcast.com पे और सुनो ये सब, या फिर डाउनलोड करो उनका ऐप, सब आपकी उंगलियों पे.
No material on this show should be considered as financial advice. The material on this show is for informational purposes only. Please consult a financial advisor before taking any investment decision.